Iran's economy is deteriorating as the US and EU sanctions over its nuclear programme bite. The recent plunge in the unofficial exchange rate between the Iranian rial and the dollar triggered street protests and a strike in Tehran's bazaar and currency market.
Well, the sanctions are driving a hole at the heart of the Iranian economy. We've seen it over the last week with the protests in some of the biggest cities in Iran. What is happening is that oil revenues are plummeting because of the EU sanctions on oil, and at the same time the financial sanctions by the US are making it very difficult for the government to repatriate its earnings. The effect is the sliding in the currency, which is due to the fact that foreign investors don't want to hold the rial, but increasingly domestic consumers just don't trust their currency anymore.
The tightening of US banking sanctions and an EU ban on oil imports has more than halved the value of the rial against the US dollar since the start of 2012. The state authorities' response to the protests has been to close the market and arrest more than 100 traders, according to one currency shop employee. The upshot is that the currency trading is now effectively a black market, where the going rate was 30,000 rials to the dollar over the weekend. Even that now is clamped down.
You don't have traders sitting in the investment banks in London and New York quoting prices on the rial. It's tightly controlled by the Iranian government. There is a website, an Iranian website, that will quote you the price of a rial. That currently has a little ticker on the front of the website saying we're not currently quoting a price for it. So it's very difficult to find out the real price of the rial. In any case, it's not something that's internationally traded. I've spoken to the investment banks in London. They're not aware of people offering any kind of contracts on it at the moment.
In Iran, there are no shortages of the basics like rice, grains and meat, yet. But the rial's fall is hitting industry.
Iranian factories are dependent on imports in one way or another for spare parts or for raw material. When they have to, their imports go up in terms of value and in terms of currency, then the finished products will be more expensive. And that's why Iranians now feel the impacts of the fall of currency on their daily lives.
Iran is overly dependent on oil exports, which have halved in 2012. Nervousness over the Iran situation has pushed crude to $100 a barrel. That and generous credit terms Tehran is offering Asian countries are thought, though, to be behind a recent recovery. But with production at a 22-year low, Iran is facing a balance of payments crisis.
The critics of Mr. Ahmadinejad blame his government of mismanaging the economy and fueling the fluctuations of the currency. So there are hints that maybe the government should go earlier than next June.
Were Iran to offer some significant concessions, such as shipping out of the country a large proportion of its highly enriched uranium, the US and the EU should loosen the screw. And this would also have an important effect on the Iranian population, because it would signal to them that there is a way out of the economic pain they're under, but that this way out really depends on their government.
Sanctions are biting and elections are looming. It's up to Iran now to show it's willing to cooperate. That would encourage the EU and US to alleviate the sanctions and Iran's economic pain. Darryl Thomson, Financial Times, London.